Adjusting entries with Mario.
Here we go!
Adjusting journal entries are entries made in the general journal to adjust any revenues that have been earned but not recorded and expenses that have been incurred but not recorded. We conduct adjusting entries under the accrual basis of accounting as it occurs at the end of each accounting period. This is the fourth step in the accounting cycle. Do adjusting entries involve cash? No, adjusting entries do not involve physical cash because cash has already been recognized at the time of cash inflow or outflow. There are four basic scenarios as to when adjusting entries are essentially needed. Deferred revenue, accrued revenue, deferred expenses, and accrued expense. Deferred revenue is when cash is received before they earn the revenue. Let's look at an example. Suppose on the 1st of May, Luigi pays Mario 1,000 coins for Mario to gather mushrooms for him to snooze. The general journal entry for Mario would look like this. Debit cash 1,000 and credit unearned revenue 1,000. Note that the unearned revenue account is a liability account because it is money that is going to be paid back. Now on the 31st of May, Mario has gathered the mushrooms and has given it to Luigi, thus performing the service. An adjusting entry is needed to record the revenue earned. So Mario's adjusting entry would debit unearned revenue 1,000 and credit mushroom service revenue 1,000. Accrued revenue is when cash is received after they earn the revenue. Suppose on 1st of June, Mario performs services for Luigi by collecting more mushrooms. Luigi tells Mario that he'll pay him back later, so Mario bills him for 1,500 coins. Mario's journal entry would debit accounts receivable by 1,500 and credit service revenue by 1,500 to reflect the earning of revenue. On June 30th, Luigi pays the invoice. An adjusting entry needs to be made on Mario's side by debiting cash 1,500 and crediting accounts receivable by 1,500. Deferred expenses is when cash is paid before they incur an expense. Suppose that on October 1st, Luigi pays Mario 1,200 coins for 1 year's worth of rent. The original transaction would look like this. Debit prepaid rent 1,200 and credit cash 1,200. Now it is October 31st. Luigi has lived there for 1 month, therefore we need to calculate the amount that Luigi has snoozed up. To do this, we simply take 1,200 multiplied by 1/12 equals $100. Thus, an adjustment needs to be made by debiting rent expense $100 and crediting prepaid rent by $100. Accrued expenses is when a business incurs an expense first and pays for them later. Suppose that Mario pays Luigi his weekly wages of 900 coins. The initial transaction for Mario would look like this. Debit wage expense 900 and credit wages payable 900. Therefore, an adjustment needs to be made for Mario to record the expenses that have incurred by debiting wages payable by 900 and crediting cash by 900. Thanks for watching!